something new happening in MEST, and that's called MEST Scale. And MEST Scale is the vehicle through which MEST looks beyond just the startups as they're starting up and the early growth of these more promising companies. But now we're focusing on later stage enterprises that have been operating for many years. They are successful, and they've decided it's time to scale up. And MEST Scale is being fashioned to support those companies. It's in the context of MEST Scale, I'll focus on later stage companies, that we've come to partner with a tremendous organization when it comes to supporting startups, and that's the Catalyst Fund. I'm going to let my colleague Kayode Adeyinka to explain what the Catalyst Fund is. Kayode is the country director, Ghana country director for the Catalyst Fund. He has served many years in the digital commerce space in Nigeria and in Ghana. And formerly, he was the country director for Jumia. He's really well equipped to lead Catalyst Fund here in Ghana. So at this time, I would like to turn the mic over to you, and then we'll continue the conversation.
Thanks. Thanks, everyone, for taking our time to be here. Before I go more into talking about the program, I think it's just useful to know who is in the room. So I'll give us opportunity to do a quick intro. So your name, your company, and what sort of problem you're solving or your company stands to solve in the ecosystem.
Hello, my name is Jeff. I'm with InfoView Data Solutions. We are an ed tech company focused on private schools to digitalize their back-end office, finance, operations, administration, and also communication with parents.
I'm Emmanuel Watesando from Curious Class, and we are also an edtech company. We are focused on trying to train the Ghanaian youth or the African youth on technology.
My name is Ulrich Sheka, working for Shopper. We are a B2B e-commerce that works in the that provides essential goods to informal retailers in Ghana.
My name is Frank. I'm with Shopper.
My name is Joseph. I'm from Boost. Boost helps find the best suppliers with best prices for small and medium retailers.
My name is Zoe. I'm from Haxa Foundation, but I'm not here in the name of Haxa. I want to be an entrepreneur, and I saw your poster on Facebook, and I decided to just pass by to see what it was all about.
Thanks for joining us.
My name is Francis Ous Mensah. I represent Ogalia Limited. And Ogalia Limited is a tech startup that we empower micro and small local manufacturers in Africa to compete effectively in the global market.
My name is Sniper Addison, and I'm an entrepreneur. I started a company called Our Data Today, and we engage in technology research, solutions, and training.
My name is Prince, and I'm also from Ogalia.
My name is John. I'm from Rankard. Rankard is focused on social recommendations, but since last year, focus has changed to conversational AI, basically enabling SMEs automate their digital channels, WhatsApp, Facebook, Twitter DMs, and the like. Yeah.
My name is David Maudima. From Mobile to I, we provide connected service, so we provide terminals for SMEs and e-commerce.
Okay, I'm Prosper Somboyabido from 3Sticks. 3Sticks helps individuals find close-fitting shoes at affordable prices.
I'm Gregory. I'm with Teledata. We are known to provide broadband services, but we are focused right now on providing access to people with low income in communities all over the country.
Great, thanks everyone. I think just before we proceed, I think it's useful to share with everyone that this is more of an informal meeting and a network session. So the idea of getting to know each one is so that once we are done with the official program, we can also spend time together to connect and see if there's any opportunity you need beyond just the IDC, that you're able to connect with others as well. But I think before I still go into IDC, it may be useful to just really understand a bit of some of the challenges that some of the startups in the room face which would then sort of lead us into what IDC stands for. So I don't know, for those that are directly serving informal MSCs in the room, if you want to share one or two sort of challenges you're facing as it stands today, and that will lead us into the other conversation.
Some of the expertise that is found in Catalyst Fund, and I'd also say in MEST, helps companies, small and medium-sized companies, to deal with the challenges that are blocking their ability to grow. And we realize that in economies like Ghana, very smart people with very good ideas and well-organized companies still often struggle when it comes to really scaling up in significant ways. And we understand that it's often systemic things or experiences that we feel like, it's often hard to grow, even though we seem to have put everything in place. Catalyst Fund and their team of experts are familiar with our environment, have dealt with many small and medium-sized companies and startups, and can address a wider range of specific challenges. And we'll talk more about what they're doing with some companies here in Ghana. In that context, we just wanted to hear, for your company, as you're thinking about getting to the next step, wherever you are, what is the thing that is, the biggest hurdle for you?
Okay, thank you very much. As Ogalia, we empower these micro and small local manufacturers in Ghana here. And we started this whole project from Agona Sodo Central Region. And through MEST, we decided to MEST pick us to join the MEST Express. So we decided to move from, that is, expand our operation from Agona Sodo to Accra. So moving from Agona Sodo to Accra has not been easy, because living in Accra, where we know where it's a new place for us, that has become one of the biggest challenges for us, because in terms of our housing, that is accommodation, an office in Accra here, that's where we are moving from Sodo. So that has become one of our biggest challenges. Although there are lots of businesses here that loves our idea, that is our project, because they have also decided to enroll on board. And because of that, we are a team of just 3. And because of the number is more than our strength, so that has become a huge challenge for us. And because of that, for instance, when you go to these fashion designers, they have a lot of apprentices. And they will be like, we want to join you guys as soon as we complete our studies or our trainings. So in this case, since we are just 3, we just have to pre-register them, so that when they get enough team members, we can enroll them on board. So these are some of the challenges that we are facing currently.
I think for us, we've gotten to the scaling phase. So the main challenge has to do with access to capital to scale, basically. So you are considered small, meanwhile you have the potential to scale. So that is the challenge we are facing currently.
Access to capital, okay.
For me, from InfoView standpoint, one of our challenge is skill set. A lack of skill set in the marketplace, because we are in the scaling up phase. We already have over 200 schools that use our platform. Trying to build the future version of the platform requires skill sets that you end up having to outsource to India or Pakistan, and that drains all your capital. So that is one of our biggest challenge. But there, of course, capital is also another challenge.
Sure.
Skill set is bigger. If you have the money, you don't have the skill set, you pay higher price for it. That's the issue.
Okay. So for interest of time, I think I can then do a quick intro to Inclusive Digital Commerce Accelerator. So the Catalyst Fund program is managed by BFA Global, which manage the Inclusive Digital Commerce Accelerator in Ghana. We launched sometime in November with the primary aim of working with 6 digital companies over the next 2 years to help improve the livelihood and financial resilience of informal MSCs that had been badly impacted by the impact of COVID. So essentially, in the next 2 years, we'll accelerate 6 companies. And through the work that we do, we will work with them for a period of 6 months. and give them grant capital of up to $120,000. But beyond the capital, I mean, one of the feedback from almost everyone here is there's need for capital. But beyond the capital, there's need to also work with the companies through the course of the 6 months. So we also offer bespoke venture building support. So what does this mean? Essentially, we spend time with each of the companies to understand your pain points as you try to go from achieving product market fit to really scaling the business. So our program is not generic. We don't give the same sort of offer or value to the companies in our accelerator. We work with you to identify what your pain points are and what your specific needs are. And then we agree together on a sort of scope of work and run with you for the period of 6 months to essentially help you go from where you are to actually scale the business, with the sole aim of being able to actually make so much impact that you're able to affect up to 5,000 informal MSCs in Ghana. Aside the funding, aside the venture building support, we also help with connections. So connections here being the partnerships that you actually need to unlock, be it on the corporate side, or even if it's a few of you are into retail, if it speaks to topics around FMCGs, we go back to our network and try to help with connections that to help you actually unlock more customers. And beyond that as well, we help with topics around speaking to financial institutions, which are part of our corporate circle of corporates that are able to help you out. So we don't just give you the funding, help you through the course of the 6 months, but we also step back to look at the ecosystem in itself and look at some of the pain points that you will have. As my brother said, beyond just the capital, beyond the work, there are other things that are needed within the ecosystem. So part of what we are also able to offer is helping you to look at partnerships, to look at what you necessarily need to unlock to ensure that you are able to actually truly scale your business. And the idea is through the period of the 6 months, we believe by then you're better prepared to be able to go out there. And beyond the money that we give as well, we help with investor connections. So we also have what we call Circle of Investors. These are investors cut across the world in our different markets that have shown commitment to invest in companies that pass through the accelerator. So there's the funding, there's the venture building support, there's the connections to corporates, there's the connections to investors as well. So it's an end-to-end sort of value offering. I know there are different topics around what do we stand for, what are the criteria. So this info session is really to tell you about the program. If there's some of you that are willing to apply, that you have possible questions or you need clarity on any of the criteria to actually partake in the acceleration. The event is really for that on one part. The other part is to also hear from two of the founders that are already part of the accelerator in the name of KudiGo and Boost. That are also, so Boost is already in our midst, KudiGo will be joining soon. To also hear from them about the experience so far of being part of the accelerator. So it's not just we saying or what you read online, but there's someone in the room that is already part of the accelerator that could also share their experience as well. And beyond that, spend time as well just to connect together, network, and then get so much benefit from this event. So as mentioned earlier, it's more informal. It's just for us to discuss, ask questions, and then network as well.
So my colleague, he speaks fast.
I see, okay.
And he shared a whole lot of information about the Inclusive Digital Commerce Accelerator. So I'm sure there's some questions that you have for him already. If you have any, then please let's hear any questions you may have.
I have a question on the people side. Money is important, but without the right people to execute, plan even, there's a high degree of probability that the project will fail. Do you help in that area as well?
Yes, we do. So we help in two different areas that speaks to that. One is in the area of helping with interns. So we have the internship program where we actually source for vibrant graduates across different markets that are able to support our companies during the course of the acceleration period. So we work with you to understand what your requirements are. And then based on the pool of the interns that we already have in our database, we are able to make those connections. And also beyond that, I think, like my colleague said, maybe I went too fast. So for me, I'm the only one on ground for Catalyst Fund, but we have a team of experts across the world that are also able to support on different topics. So topics around people, HR, and all of that, we have people that are able to help support. And beyond that, we work on ground with our implementing partner, which is MEST, who are also vast around topics that speaks to that.
The companies that the Catalyst Fund will be working with in the IDC, Inclusive Digital Commerce Accelerator. Can you describe the companies that you will work with?
Okay, good question. I know there are a lot of criteria that for some of you that have been to our website, you might have seen this, and is straightforward as this. I'll just go through each one of that quickly, just to put a bit of context. So for us, if we remember the overall aim is through the course of 2 years of working with companies and beyond, we are able to impact up to 25,000 informal MSCs. So we really want to work with digital commerce companies or anyone playing in the digital commerce value chain that can directly impact informal MSCs. We are really strong on the work that we are able to do with digital commerce companies. So for us, inclusivity there speaks to anyone that is able to work with informal MSCs, or you have a product. It might not necessarily be what your business seeks to solve, but if there's a way that you work directly or indirectly with informal MSCs, we are looking to actually consider you, we're able to consider you for the program. On proving traction, we're really looking at businesses that have gone beyond just minimum viable product. So there's some form of early traction already. You have paying customers. You've gone beyond just a prototype to you really having people pay for the service or for what you're really offering. And stage fit, for us, we really want companies, again, you are just right about product market fit. You are sure that you have a product that can definitely serve the market. We really want to spend time trying to incubate. We really want to move. So it's more of growth stage companies that are really looking to grow fast. They've been able to confirm that there's customer base that really speaks to their value offering, and they're really just looking to scale their business. So maybe I take a pause, and if there's any question on the first three that I've mentioned, sure.
So oftentimes there are companies that have bootstrapped and they've not raised any money from investors, and these companies are doing amazingly well. How do you deal with that when it comes to their proving traction, since they've not raised up to 100,000?
Yeah, very good question. So, that's the reason there are different programs targeting different stages of companies. You have incubators that possibly speak to our partner. MEST also has this program that speaks to the target market of those that you've said. But for us, the idea of having raised initial funds is to ensure that the money we give, the grant we give, which is $120,000, is not necessarily to prove the model. It's really to grow. And that's why we will have loved for you to already have some form of initial funding raised, so that the money is not to prove that you're able to grow, but that you are essentially at the point where you can actually grow. And that's why our core focus is those segments of startups that are really at that stage. This is not the sort of first funding you're getting. If you've managed to bootstrap, and you've bootstrapped, up to that amount, and essentially you have the traction to actually prove for it, that's fine as well. So the funding doesn't necessarily have to be from, either it's bootstrapped or angel. That's not necessarily the focus. It's more of you have something going on already. There's revenue, you're generating revenue, and then the money we give can then catapult from where you are to take you to actually scale.
Yeah, I want to find out, is there any particular sector that you prioritize? So, digital commerce, so let's say, is it something that is focused on agric or tech? Are there sectors that you prioritize, or any sector can apply?
So we're sector agnostics, but in the end, we want it to be along the digital commerce value chain. So this could be a logistics company. This could be a company just necessarily focusing on retail. It could be, so far there's an intersection where informal retailers are able to leverage the technology to really digitize their business, is really what we're looking at.
When we say along the value chain, another way of looking at it is, if the value you create in your company is something that helps enable an informal marketer, that someone that, they may have registered their company, but they don't have a lot of systems in place. It may be a micro enterprise, a mom and pop shop. What you do helps them to move their business forward using technology. That's another way. And especially if it's in a retail, they operate in a retail, and you're helping to automate or digitize their retail. So I'm just saying the same thing he said, but I just want to make sure that there's along the digital commerce value chain, you understand what we're talking about.
And I think maybe just to quickly add to that is there needs to be the commerce component. I think that's the actual important thing. There's some form of trade going on, all right? That's the watchword.
Okay, so I heard what both of you said, but I want to dig a little deeper. So you use the word informal quite a bit, but from what the organizations that, for example, InfoView we deal with, they are registered businesses. So it doesn't mean those audience or customer base that InfoView deals with doesn't qualify as informal customers. That's the question, the first question. Yeah. Second question is the value chain that you are unlocking, is it targeted towards B2C or B2B is also inclusive?
Yeah. So I'll start with the second question. So it doesn't matter if it's B2B or B2C. It could be B2B2C, right? The essential thing for us is that there's that interfacing part where informal, what we term informal MSSs, which I'll come back to explain, are actually able to interface with the technology. So your route could be directly a B2C route or could be a B2B2C, but not necessarily just a B2B. But again, what you term B2B, for example, in the case of one of our cohort company, Boost, they are directly working with retailers who themselves are business owners. So it depends on the context also of the kind of business owners that we are referring to. But ideally, there needs to be like a B2B2C flow for that. And on your first question, it's yes and no. It also depends on really looking at the customer segment that you speak to. Ideally, when we say informal, we're looking at it could be retailers, it could be merchants that are not necessarily formalized. So there's a bit of exclusion. They're excluded from the regular finance. They're excluded from access to finance. They're excluded from access to government records, database. There's no sort of records for them. And they are trying to leverage digital commerce to be able to be included. I think that's the way we frame inclusive.
So, for example, we have about 40% of our customer base are what we call urban poor schools. Okay. So these urban poor schools really don't have, they operate as if they are informal, but they are actually registered business. Now, because we deal directly with them and they deal with parents or parents of students, would you consider the parents or the students?
No.
Okay, all right, thank you.
So I want to go beyond the industry, right? So I think Kweku mentioned logistics, you mentioned e-commerce. So I'm more interested in the logistics space here in Ghana. I think there's a lot of similarities between these logistics companies. And you mentioned that their focus is to empower 6 companies in 2 years. So my question is, how do you deal with companies that are similar in terms of product offering? For instance, 2 logistics companies. So how do you deal with that in terms of getting these companies into the program?
So good question. Again, remember the work we do with each company is bespoke for that company. We might find out through the course of, the selection process that we have companies that are similar. But in the end, the work we do with each company is different. If it means working with 2 logistics companies, it's fine. But the work we do with each is different, and our work is bespoke. There are opportunities for us to have workshop sessions where we bring the 2 together. Otherwise, the work we do is independent of the other company. So what we do with you, even if you're a logistics company and it was to be a logistics company as well, it's totally different. It speaks to your customer segment, your business model, the stage you are is really what will determine how we work with you. So we are open to work with, 3, 4 logistics companies as part of our cohort. It really just depends on the work we do with them. And what you often find is for each logistics companies, the business models might be different. Their true North Star in itself might be different as well. So our work is still specific. And that's why I said it's different from other types of accelerators where it's more of a classroom style. Everyone goes through the same modules. It's the same plan for everyone. This for IDC, it's different. It's bespoke. We work with you. We'll align with you on what exactly you want us to do. That speaks really to you being able to grow. And that's what we'll spend time to do.
So let's say, for example, one of the problems that I've come to observe with the startup space or the business space in Ghana is when you're starting something, you really struggle with partnering with others because if you need their services, you either pay more or you develop that aspect on your own. And that can take a lot of time. So just because you mentioned the partnership and the whole logistics is coming up, just to give an example.
Yeah.
So let's say someone produces agricultural product or produce, and the person needs to move them from wherever he or she is producing to Accra. The person will have to take the burden of providing the logistics to move it. Now, let's say there's a digital solution which focuses on helping the farmer produce the crops. That is the core of the business. But then now the person has had the need for the person to add moving the products to Accra. In such a situation, do you provide, does your support come in the form of just focusing on the core of the business, or you actually have your partnership circle can help provide the logistics challenges?
So very good question. Our support, again, is tailored to your needs. It's possible we don't even have a partner that speaks to your immediate need, but what we offer is based on our network. We are able to go back and say, there's this company, these are their needs. Is there anyone that is able to help with that specific solution? So what we do is at the beginning of the program, once you understand your needs based on growing your business, and your partnership needs as well, from day zero, we already begin to check within our network to see if there's anyone that can actually address that specific requirement, and then we try to bring them as partners, because we have the leverage to be able to have those conversations and then see if there's a way to actually have a partnership with yourself. So as it stands, it speaks to, what each company needs. If it's someone that we already have, if it's a company that is already within our network, then it's quite easy. If it's outside of our network, then we try to look within and then see how we can bring them on board. So it's specific to the needs of the company.
Okay, yeah, just a follow-up. So
Sure.
just because my brother over there mentioned the registered company and non-registered, does the company you're looking to support, does it need to be registered? Or even if it's not registered and it's informal and it's operating, it can still qualify?
So when you say the company, the organization or the startup that we work with, right, needs to be registered. Okay. But who that organization or startup serves doesn't have to be registered. And what we find out is that most informal MSCs are not registered. But by the work that this company does, by digitizing either their logistics flow, their retail, they can then begin to be digitized. So I don't know if I've answered your question. Okay.
Okay, so I want to ask a question on the proven traction.
Yeah.
So I see two things there. Either you've raised a minimum of 100K, or it's revenue positive and it's serving at least 500 customers. Can you kindly explain that?
I think it's as straightforward as it's written. So, all of this criteria in itself, so there's topic around geography, right? For us, I think the first thing really is the company we want to work with needs to be present in Ghana. It's possible for you to actually have other presence in other markets, but the work we will do with you through this program is really to help scale the business in Ghana. So that's sort of a priority for us to ensure that we're working with the company in Ghana. Beyond that is also the topic around inclusivity. We really want the work we do to really speak to the informal MSCs, right? Because that's the mandate for us for this program. Beyond that is to also ensure that you have access to about 6 to 12 months of runway, at least at the minimum. Again, going back to what I said earlier, the idea is that the money we give, the grant that we give, shouldn't really be to take you through the journey, but to really accelerate the journey. So that's why we also stress that at least we want you to have at least 6 to 12 months runway. But the other topic around proven traction, again, we treat this on case-by-case basis. You must satisfy all the criteria, and then we see that through the work we are able to do with you in the 6 months, we can actually grow significantly. Even if today you don't have up to 500 customers, we can actually consider. So what we really look at is, geography, definitely, potential to scale, because definitely we want to achieve, each company should be able to directly impact 5,000 informal MSCs. So you might not be there now, but there's that trajectory to say that you're able to get there. So you don't necessarily need to satisfy all the requirements, right? But there are requirements such as geography, which is super important, skill, runway, which we really look at. And then we rank all of this.
If because of your unique business, proving traction looks somewhat different than these criteria, and you can use that criteria to prove traction, then that's a great case that you can make. Okay, so I think this may be a good time, because what you're hearing, I hope, is that the Catalyst Fund gets really involved and engaged with your business, and it's bespoke, and becomes really a real partner in achieving your growth and your scale objective. So it's different, it's unique for each company. And I think maybe this will be a good time for us to invite two founders of companies who are currently a part of the IDC program. And they can share with you a bit of their experience. How about that? So let me invite Joseph Kuvor and Kingsley Abrokwah. And I'm sorry for mispronouncing your last names, but come on up and join us. Let's get a mic in both of their hands. And I'm going to first invite you to introduce yourself and say a bit about about your company and what your company does. And finally, to just, I've just seen you. I like his mask. He wins a mask prize. In addition to saying your company and what your company does, so we understand what your company does, then just say a word about why you initially applied to the IDC program, okay?
All right, so good evening. My name is Kingsley Abrokwah, and I work for a company called KudiGo. And okay, I'm the founder and chief enabler. Oh, okay. Wow, okay, so that's my face. At KudiGo, we offer merchant-oriented solutions for the consumer retail value chain. What that simply means is any business doing consumer retail is our target customer. But our primary focus is on the last mile retailers. So your shop down the street, your little pharmacy, your supermarket, they are those we focus most of our effort on. But at the same time, we offer services to FMCGs, banks, and all that, with the ultimate aim of creating value for the last mile retailer. So that's what we do at KudiGo. We have a range of solutions for this. We have our storefront solution, we have our rapid gate solution, and we also have our online store solution called the Storefront Mall. So that's KudiGo. We've been around for the past 3 years, and yeah, I'm one of the people who make it work.
And why did KudiGo apply for the IDC?
So it's really because, so for me, at a point in my life, I was a pitchpreneur, if you know what that means, right? Hopping from competition to another. So I've literally been through Demo Africa, Startup Weekend, Seed Stars, I mean, you name them, you know. But what we realized was that even the application process for the IDC program is a lot of stuff. And secondly, the program is designed, like he said, to be very bespoke. Like, I'm sure what we are going through, he's not going through the same thing. It's a whole different thing, right? And initially, we were quite skeptical because we thought it was just another accelerator program where they'll come with a blueprint and say, check these boxes, and then you go home. I can tell you for a fact, it's nothing like that. It's a lot of work that will actually benefit your business. And so for us, it was a gamble because we felt, let's try it and see. But after getting into it, man, it's been a ride, and we are glad we did.
We'll hear more about your experiences, but first let's hear from Joseph. Let's hear about your company and why you also applied to the IDC.
My name is Joseph Kuvor. I work for a company called Boost. Boost is a tech company that helps small and medium retailers, what we call neighborhood stores or provision stores, to restock. Our value proposition to them is that we help to find them the best suppliers who have the best prices and deliver the goods to them. We want to be that middleman that facilitates efficient distribution of fast-moving consumer goods so they can have more to stock their shelves, sell more, and grow. And as they do more business, we help them with inventory finance. So we give them payment terms so they can restock above their usual working capital. So we're confronting the access in various ways in terms of finding the product itself and also the working capital that is required to do business and to grow. And we do all this through a very easy to use technology, something that all of you have. The interface is inbuilt, it's chat oriented, WhatsApp based, the whole back end is a different beast. Very friendly tool for them. So in a nutshell, that's what Boost is about. We work with various FMCG manufacturers, product manufacturers and importers and distributors as the supply side, and we acquire and serve the retailers on the demand side. We're also getting demand from schools. There are some hospitals who are hearing that we can help them get their supplies easily, so they are coming on. But our primary focus remains the informal businesses, neighborhood stores, which I think most of you buy products from. So that's in a nutshell, that's what Boost is about. Why we joined the IDC program, I've long known about MEST because I had a couple of friends who went through some of MEST programs, and they have only good things to say about MEST. And I see what they've done. Some have gone through programs that were supported by UNICEF and many other funders, and they have turned out to be very fantastic entrepreneurs or various project leads. And then our business in Ghana is we have a very interesting model that allows us to expand across Africa. So we have a platform, and we are a franchise under that. We are the founding franchise. So we now have franchise also in South Africa and Nigeria. So our franchise team also does know some of the people in the BFA group and Catalyst Fund. So they recommended to us that there's a lot we would learn. And a lot of the speakers spoke about beyond capital, the challenge you will confront as entrepreneurs is talent. And for us, knowing that we could tap into that expertise that is in the IDC program coming from both MEST and BFA was like, it's a once in a lifetime opportunity at our stage. And I'm sure as we converse more, we can talk about what we have achieved. So that expertise, the fact that the program is bespoke, the money is like the last, it's good, but it's like, it's the small piece of the whole thing that you get, yeah. So that's why we joined.
But he smiled when he said the money is good. For Joseph, I'll start with you then. Share, if you could. I mean, you know, you've been involved in this for some time, but you're in the middle of it right now. So just share one or two of the contributions that the IDC has already made, even at up to this point in your organization, and then we'll hear from KudiGo.
Kingsley also mentioned that this program is bespoke, right? And for me, the excitement I get is I've worked in customer insights in various companies, and so I like strategy that evolves from data. And so the IDC program starts with a diagnostic sprint where we are all immersed in the data, so that the sprint and the whole project that is crafted is immersed in your context and in your data. So that immersion program, and out of that, we built a dashboard, automated. We hitherto were dependent on G Sheets because we have the Google Workspace that we use. For a lot of our model was built in that, but we've built a dashboard that allows me to be able to visualize our performance. So that is already there. So even if the program got aborted today, I have that that I can keep using. And then we've done some interesting consumer journey mapping. We've produced a lot that we're already using. And a number of those, I'm sure you may be familiar, you can do yourself. Like the dashboard, we have tech team that could build it, but it would have taken us longer. So this is the whole concept of acceleration, right? That's something that it could have taken us a year or two to build, and spent our own money, spent our own resource, doing our own spec. Now we've just tapped into this expertise, and we have that with us. So it's like extending our workforce by having the Catalyst Fund team with us. So for me, the big win is those two at the moment. There are many more that we can talk about later.
And how about for KudiGo?
Well, I mean, for us, I think I'll start from the people perspective because people mentioned about that. So when we joined the IDC program, we were at the stage where we were a team of 19, but we were still swamped a lot of work. And there wasn't enough people to do the work. The challenge with running a new company is that you can't hire the best talents because you can afford them. And if you have people who are substandard, they draw you back. What the IDC program has done for us is that they helped us put together an internship program. And today, at a go, we've onboarded over 9 interns from various universities. And it's not just onboarding the interns, it's the fact that there is a whole workshop being managed by IDC for these interns to ensure that once they come into your business, they are ready to work. And for us, that was very valuable because I don't have the time and space to be micromanaging people. So it's important that when they come into my business, they are already geared up, they know exactly what to do, what tools to use, and that really has helped us as well. And I also talk about the data part, because for us at KudiGo, I mean, at our core, we are a data company, and we have a lot of data. And we, at a point in our life, try to build our little AI algorithm, but it's no child's play, right? So when the IDC program started, the very first sprint we got into was a big data immersion program where they helped us build tools on AWS to better dive into our data, to draw various parallels between, I mean, all the buzzwords you hear, what's your churn rate, what's your, resurrected users and all those things. It's nice to say it, but being able to visualize it and be able to monitor it in real time will give you more insights than you could ever hope for. So for us, those two things has been very valuable to our business. Yeah.
That's super. That's super. What has surprised you about this experience that you've had? And how long has it been? It's just been 3 months, or what has surprised you about the program or about your experience in the IDC?
The IDC team will put you to work. Like, your calendar is always full with workshops, this and that. So really, if you join the program thinking that you're just gonna chill, the grants will come, and then Charlie, it's balling all day, you'll be so disappointed. And it's not only gets you to be up and doing, it gets your entire team to be up and doing. Because what we did was that majority of my management team and even people who are not in management are part of the IDC program itself. Because the goal is that once it was done, we should be able to take those skill sets and use it internally. So what surprised me was that they were really serious about the work they said we're going to do. It wasn't just some, eye service just to get us to apply. Like, they'll be chasing you for stuff. And if you don't do it, they have a nice way of sending an email that'll make you know that, Charlie, you are being queried, So for me, that's what stood out, the fact that they are really, really serious about the work here.
For me also, I mentioned that we're already a data company, and our product head and our CTO are all like very competent data people. But my product head mentioned to me a week ago when I was following up on some analytics that I wanted, and he mentioned to me that the learning curve for the to develop is a bit steep, which just for me exposed some gap in our skill set, which I didn't think existed. So it was surprising. And the fact that, so if we were going to do all of that ourselves, it would have taken us much longer, right? So that exposure to the gap was very revealing to me. And also how much we're able to complete within the short amount of time that we had was surprising. So I just know that we are actually, I think I'm using this word often, but we're actually getting accelerated because we are moving faster than we would have moved by ourselves.
What I'm hearing is that when we think about the IDC program, of course, there are some clear benefits, a grant, and this idea of bespoke acceleration. But what it's sounding like is experts putting a lot of time into specific challenges that you face, not even challenges, specific opportunities to move your company forward. And so when that happens, it sounds like you may have also gotten some insights into your own business that you might not have otherwise had. I'm wondering if you might share any of the insights that you've gained about your own business, your own business that you founded.
Yeah. I think there's one that like I reached out to Coyote, who is our project lead, after a workshop, and I keep talking about it all the time. This is about sales, and we did not at the time of designing the sprints, we did not have a specific sprint for sales. But at that workshop, I realized that we could change the way we are selling to our suppliers, or we are approaching our suppliers. And so I spoke to Coyote, spoke to the presenter, and we quickly put together something, right? So that the workshop exposed again a gap in our pitch. So I think the insight for me was that there was so much more we needed to do and approach our selling differently, and also the tools that we required. And so we ended up designing a mini sprint to take care of that. And right after the workshop, I joined some of our salespeople and started to try that new approach to selling. And it was interesting, the results that we were getting. Right. Yeah.
Brilliant. Thanks.
Well, I mean, for us, it spoke more to how we sort of acquire our merchants and what we use to measure as whether a merchant or a user is active or not. Because for the sort of business we ran, it was very important that, so we have a mobile app, but then we don't count downloads as users. What we actually counted as users was somebody who downloads our app, who creates an account, who sets up a store and does some transactions. Because that is at the point where you become a sort of a useful user to us. What we learned through the IDC program, I mean, in our data sprint, was that our definition of active users was wrong. Because we quickly saw that we catered for various niche industry segments. I mean, we had pharmacies, we had boutiques, we had people who sell building materials and all those things. And you realize that for each one of them, their behavioral patterns are different. So if a pharmacy is keying in data every other day, for all you know, maybe somebody who sells building materials does it every week. So if your definition of an active user is somebody who keys in data every other day, you are wrong. And so what we ended up doing now is to define an active user as anyone on our storefront platform who does an action. The action can be maybe they added an expense, or they added a customer, added a supplier. We just had to make it so sort of liberalize it for them so that it fits within their own concept rather than defining what we thought was an active user. So that's one key thing that through the data immersion we're able to come up with. And so far it's helped us. Yeah.
Thank you so much. So you have two founders and two companies that are currently going through the IDC acceleration process. And they also have been through the application process. So maybe you have a question or two for Joseph or Kingsley. Any questions?
The question is for both of you, actually. You look exhausted. Do you have any regrets that you took the money? No, I have a question. How long did it take from start application to getting the grant?
I think about 3 months, or 2 to 3 months, I would say. It didn't take too much time, I would say. I'm exhausted, not because of IDC, I would say. Yeah. So yeah, not too long. And most of it, the engagement was also digital, online. I think we started the application either in November or December, and by early January or so, we had feedback that we were successful. So yeah, so the holiday also played part. So 2 to 3, I'm sure Coyote can tell better. Yeah.
The thing about this program is that it's very well structured. Okay, so when they say you are going to get your money on this date, it will hit your account on that date. The only reason you won't get it is because you didn't meet certain milestones. And so most of the time, it's up to you, the entrepreneur, your team, to ensure that you always have the sprint in view and know exactly what is required of you. Because it's a grant, there is no equity exchange. So there are reporting lines you need to adhere to. So as far as, at least from my experience, if you meet all those milestones, you will get your money. And yes, we are exhausted because, Charlie, it's a lot of work, you know, doing all these things. But I mean, we love it. That's why we're here.
Yeah, so still on the money. So I want to find out. I mean, the money you're taking it to spend it on something. One of them is the expertise you need. And so I want to understand, once they are providing support for the expertise, does the money that you needed, I mean, like you mentioned, you didn't have money, so you couldn't get the expertise. What is it that is refunded or you spend it on something else? How does that work? Is charge? I mean, the expertise that they provide is charged. Some like I mean.
Yeah, so maybe I quickly take this and I can give them opportunity to speak as well. So the $120,000 that we give is pure grant. At the time of the application process, we will have send the template to you to tell us exactly what you need the funding for. This could be to get internal personnel. It could be to spend on software acquisitions. It could be to spend on anything really. So as long as it's not to procure physical assets, right? If it's anything to do with really growing the business and the work that we will do, you are fine to spend the money sort of, as you please, so far it speaks to the work we're going to do with you. But the actual venture building in itself is a separate thing. So there's the money which you spend to actually grow your company, and there's the venture building work we do together as well. So the 6 months that we'll spend with each of the companies, the work we do, all of that is different from the actual $120,000 grant that we give. So it's separate. So all the work we do, it's there. The money we give as well is really for you to put back into your business to really grow your business. But it won't be for you to sort of buy land and any of that. It's really to, either recruit more people, pay for software, grow your business, do marketing. Any of that falls along with what you can do with the money. But for that, we don't micromanage your use. It's really for you to just report to us back on how you've really spent the money, so that we are sure that you spend it on things to really grow your business. But the venture building work we do, the connections to corporates and investors, it's different from the grant. And as he said, it's pure grant. There's no equity, there's no payback. It's pure grant.
And just to add to what Coyote said, I think when you are a business, I won't say startup, when you're a business and you raise a number of funding rounds, you realize that the money is a minute part of what you actually need to do to grow your business. In the sense that, you can raise $1 million today, right? You can burn through it in a year and you still won't be able to buy a car. And that's your reality. Because as your business scales, there are other things that scales with it, things you didn't project for. And in terms of using the money on talent, let's say you want to hire a back-end developer. You offer the person $2,000 a month. Andela offers the person $6,000. Where would they go? So you may think you are offering competitive rates, but then the talent pool is so small. So that's why it's important that you're able to leverage on other things they give you aside the money to be able to grow your own internal team who will be able to help you grow. Because right now, talent is hard to come by. It's really good talent, right? So the money, trust me, from my experience, it's very minute. It will come, you will see it. You might not even touch it till it gets finished, because there are other things that will pull it. So my advice will be, the money is good, but then there's a lot of things you need to do to stay relevant and be able to grow. Yeah.
Thank you. I have a question for Kayode, actually. Okay, so I think you mentioned that the money is not to, let's say, invest in physical assets. So I want to ask a question. So what if that investment is more like a capital investment? So I'll give you an example. So there's a company that tried to connect farmers to, let's say, shops, right? And it means that they need to focus on growing the crops from the farmers' end. But then they realize that the farmers are unable to meet the demand based on their produce. So that would mean that that company would have to invest in lands and then grow some of the crops themselves in order to meet the demand. It means when they get the grants, they are going to use it to buy lands and start growing. So how do you deal with that, since they are still going to invest in such?
Yeah, good question. So for us, you can't invest the fund on physical assets. So in terms of procuring a land, you can't do that with the money. But in terms of being able to offer sort of working capital for farmers, so if you had to give them in form of credit lines, you're able to do that. But during the 2-year time that we'll work with you, you need to actually get this money back from the farmers and apply it back into your business. For us, the idea is that this money is really spent on growing your business. Yes, it makes sense for your own business because you need to actually make the farmers, invest in land. but you are not allowed to actually invest in physical assets because we are unable to continue to sort of track how that goes. We really want the money to be spent on things that speaks to either talent, software, or any of the other topics. But if you wanted to give these farmers some form of credit lines or working capital, you are permitted within the legal topics around the loan to do that.
I still have question concerning the use of funds for the physical asset. Concerning the nature of our business, for instance, we are looking at, we started from a grocery scale to Accra, and you are looking at building fulfillment center whereby we are going to take these local manufacturers' product, we repackage before we ship to the other countries. So we need these fulfillment centers as we grow. So as part of this, does it mean that we can't, probably if you have such a fund, you can't use it since we are looking at getting a fulfillment center before we get the staff there?
Yeah, I think it still speaks to the same thing. So maybe just to give a bit of background and context. So we get the fund comes from our funder. We're funded by MasterCard Foundation. And if you're familiar with, money from donors, there are certain criteria on the use of funds. So for this, it's clear-cut, you're unable to use it for procurement of physical assets. It's just the mandate of the program.
Thank you. So I think this first question goes to KudiGo. So I've had two durations. Is the program for 6 months or for 2 years? Secondly, I think for KudiGo and Boost, so Kweku, right? Yeah, Kweku asks why you entered into the program. 2 months or 3 months down the line, do you really, has that perception changed? Obviously, I think that from what you are saying, there's more value outside of the money that you are getting.
So it's the actual venture building work together with the company is for 6 months, but we track the impact over 2 years. So remember I mentioned that we want the startups to be able to impact directly 5,000 informal MSCs. Obviously that is not within the period of 6 months. It's over the course of 2 years. But the actual work that we will do together with the companies is during the course of 6 months.
Okay, and after the 6 months, is there a reason to still provide support if, let's say, for instance, things does not go according to plan or something?
Yes, this again is specific to, what didn't go on plan, what is left, what work you want us to still help with. But definitely once you, pass through the accelerator, you become an alumni, and we definitely continually offer support. Remember that I also mentioned that we also help with investor relations. So there's topic of ensuring that even when you come out through the program, if you really want us to connect you with investors that are willing and ready to actually invest in your companies, those conversations still happen even outside the 6 months period. So there's a lot that still continues to go on beyond just the venture acceleration.
So there was a reason you applied for the program, but 2 or 3 months down the line, do you still think that those reasons are valid, or you've even gotten more benefit and those reasons? Because I think when we're going around trying to ask what we all want, I think one thing that stood quite prominent was access to funds, right? So there are a lot more others, maybe being able to manage your operations. And I think you put it rightly where you say they demand. Sometimes if you don't have somebody demanding something, you'll probably be working the way, we are all driven, but when there's a higher authority trying to demand certain things, we operate in different circles, or we more or less operate at a higher pace. So what you intended to get out of the program and what you are getting now, can you be able to draw that comparison? Maybe in the form of capital, access to market, maybe optimizing or making your operations quite efficient. Just trying to get some clarity in that sense.
From where we started, when we started, and what we are getting now, for me, I think that we're a little above expectation for me. And the money is in your face. So when you are entering, you know that you're getting 120,000. But the other things that come, the venture building part, you actually don't know. That's something you're going to have to work with the Catalyst Fund on to craft the whole scope of work. And for us, I was quite surprised how flexible this is, that we started from the diagnostics part and highlighted the insight. And most of the things that we found were already in our priorities, which made it very easy for us. So the insight for me was kind of, it confirmed some of the things that we had, which we, in our business language, we use the terminology of hypothesis, if you can prove it, right? So it helped us to align quickly and just double down on our priorities. So we didn't have as many conflicts as we thought earlier that we were going to have. So some members of the team thought that this was going to distract us, but because the priorities were aligned, it does not distract us at all. So I'm getting more value than I thought. Doesn't mean there are no problems. We are working with humans, so there will always be challenges which we are working on, but I'm getting more value than when we entered. Yeah.
You don't want to take it. Okay, I'll just add a bit to it. So more money, more problems, right? But I think for us, I can't really draw a parallel because we went in expecting the very basic of whatever any accelerator will offer you. But I can say for a fact that what we are getting as of now, we couldn't have imagined that sort of value being added to our business. And it's not just value in the sense of, send email. It's not academic. It's practical. Okay, they literally come down to understand your business from your perspective and build a framework which you help them design. If you choose that, okay, for like he said, a particular sprint, he didn't want something in there, he changes it because it's his business. They are just there to support. So really, they just sort of make your team bigger than it seems, right? And they put in the work. So we didn't expect that because we didn't know that actually existed. But now that we have it, we are quite sad that it will end soon. So please take us back. Yeah, but that's it. It's been great. Like, we've loved it so far. Yeah.
I have a question about what benefit, direct benefit, the fund gave you. So where were you before you received the 120K, and where are you now after you have received that? Of course, the follow-up question is, are there any lessons learned there? Would you have used the money more wisely? Would you have generated more revenue, more customers with that same, within that period? I'm not sure, but I believe yours is 3 months, and yours maybe longer funding, right? So, or is it 3 months?
We are all in the same period, yeah.
Yeah.
I mean, okay.
So just before, he answers, I think just to put a bit of context as well. So the actual 120K fund then comes in 3 tranches during the course of the 6 months. So as it stands now, they've had the first tranche. The second tranche is already due, and there's a third tranche towards the end of the program. So the 120K doesn't come, it doesn't come up front. So I'll leave it to answer.
I think for us, so outside of the IDC grants, so far we've raised close to $1 million in equity investment. So we did have money because we are actually running a business and we are merchants all over, investors all over. So yes, obviously there's not enough money, so you always want to get more money. So the money was attractive, but then it wasn't sort of what sort of we needed that to get into the program, which is why I personally keep trumpeting on the value that they've brought. Because at the end of the day, if you are not probably a pay stack or a flatter wave, you don't have infinite resources to be able to acquire talent and all those things. So really, when we started applications to the program, and for the past 3 months, like he said, we only got the first tranche. By the amount of work that has been put in, is probably more than probably the entire grant capital that we'll get in the program. And that, for me personally, is very significant.
Did you hear the point he just made? Did everyone hear? If you didn't, raise your hand. If you didn't hear. Okay. Can you say it one more time anyway?
I don't remember what I said.
You said something like the value that you get from them outside of the funding is worth more, but maybe worth more than.
It's actually that's for, like I said. I'm sure Joseph will agree because we are all in the program, and I keep saying this because when you are a new business, you are 3 years, 4 years, your business keeps changing quickly. There are so many things you need to do. You have to do it. but you don't have the resources to do it. So when someone comes in and is not telling you, okay, you are doing this wrong, do this, but they literally listen, and literally you are now like their bosses telling them, I need this done. I can send them and say, you know, hi, it's here, I want by transactional email templates, 20 of them. They work on it and send it to me. That means I don't have to pay anyone to build those templates for me. And transactional emails are very important if you are doing payment transactions, you know, debits and all those things. And you need to write it well so people can actually open it. So for me, it's very significant that that value is there, because it saves you so much time and resources that you expend.
The Catalyst Fund experts are experts in their domain. And depending on the engagement with the company, different of the experts are called in. So this example that Kingsley just gave, reaching out to a marketing expert to provide that support, detailed support, you know, is an example, just one example of the contribution beyond funding that is being made by the organization. Next question.
You kind of answered my question, actually, Kwaku. My name is Joanna Steele from Leadmonger. I suppose tech startups, notoriously, I would say, tend to see marketing as an expense and not an investment. That's a bit of a generalization, but that's kind of what we tend to see. So I suppose my question is, because I'm from a performance marketing agency, I would like to know, do you see that with the grant that people are spending money on marketing and to help with brand awareness, customer retention, customer acquisition, or are you seeing that the majority of funds are spent in other areas of the business?
Yeah, I think very good question. For my experience, it's just with two companies that are currently in our cohort now. But I mean, if I zoom into our sister program, the Inclusive FinTech program, that is in other markets in Africa, I think most of the funding largely goes to personnel and marketing. That's where you find most of the funding going to. And this is speaking to our other markets as well. So in Nigeria, Kenya, Mexico, and the rest, we literally find out it's marketing personnel that most of the companies end up spending the funds on.
Okay, so my question is for Kayode as well. So you mentioned that the focus is also on logistics businesses. So it takes my mind back to the use of funds again. So would you consider investing in fleet, investing in physical assets? Because
it's a physical asset.
It's a physical asset, right? Okay, cool. So with a logistics company, what model are you actually looking at? Are you looking at a logistics company that actually owns the fleet, or just the one providing a platform for people to hold their fleet on? Because if I'm controlling fleet, it means that the more fleet I have, it shows my scalability and stuff like that. So I want you to throw more light on that.
So just to bring better clarity to this, and physical assets, I mean, it's physical assets, right? Be it a bike, be it land, physical, it's the same terminology. Physical asset is physical asset. But I think more importantly, what we're looking at is the fund that we give must address what you really want to use to scale. In your case, it might actually be buying assets, buying the motorcycles. But the point is, at what point does the work we do with you directly interface, or are the informal MSCs able to interact with it? That is really what we want to try to scale during the journey. So for us, that will possibly speak to either your technology, or there's one of the product verticals that you have that we really want to work with you to accelerate. We wouldn't necessarily want to work with you to accelerate, procuring more lands, because it doesn't speak to it doesn't speak to our domain, or procuring motorcycles. So I would believe a logistics company at some point will have an interfacing point for small businesses to be able to go to an app, to be able to request for them to have a rider come to their shop to pick up items. That is exactly where we want to actually do the work. So how do informal MSCs directly interface with your solution or your product? That is really what we want to try to scale with this, and not necessarily the assets. So it's the product that we really want to try to scale, and we really want the money to be spent on the product, the digital product, and that's why the topic around assets doesn't come to play.
So one of the things that personally I have never been in any accelerator, mostly because I have fires to put out. Even as I'm sitting here, I'm putting out fires because I have a big customer that needs their reports done today. Now, when you joined the program, how were you able to free time to manage day-to-day operations, as well as to be able to meet the expectations of the program?
Okay, so we both use the word bespoke, and the fact that you're going to define the scope of work together with them. And so on our side, what we did was to ensure that the program was addressing our challenges, immediate and our strategic direction for the future. So the priorities are entirely aligned, which gives me room to be able to fight my fires. And if I should talk about the fires, it means part of the scope of work is to find the root cause of the fires and be able to address it so that they don't keep coming or they should reduce. So that's how we handled it, the prioritization to take care of today and the future. So they are totally aligned on our side. And when priorities change down the line, because we're a startup, we're still finding ways of taking advantage of new opportunities, of better ways of doing work, we get back to them to say, our priorities have changed. How can we work this into the scope of work and to the sprints to ensure that we're still very aligned?
And just to add to what Joseph said, I mean, the IDC team are not oblivious to the fact that you have a real business to run. And to that effect, they are very disciplined in their approach to work. If they tell you that a Zoom call will take 30 minutes, it's 30 minutes. It won't go over a minute more. And that is even something we have learned from them. So you are able to actually plan your entire weekly schedule. They don't spring stuff on, oh, Kingsley, tomorrow morning we have a call with you. No, it doesn't happen like that. So everything is pre-planned. You have the flexibility to say, okay, let's move this tomorrow. And they will accommodate it because they know that you are not an idea company, you are a growth stage company. And the discipline in terms of how they handle reporting and everything, we even let you even save more time, honestly. Like, because some of us get on Zoom calls and people are talking anything for like 2 hours, right? Just talking and talking. These people, 30 minutes, they are done. Whether you are finished or not, the call has ended. And then you move. So for us, that has been the way we've handled it. You still get to do your work and still get to deliver for them.
I think maybe just to add to that as well is we don't just work with the founders. The work we do is with the team. So there are times that you might find that Joseph and Kingsley don't need to be on the calls. We want to work with who speaks to what we are trying to deal with. So we don't always expect the founders or the managing directors to be the ones that we are interfacing at each point in time. At the beginning, we will have decided what the sprints are, what the points of contacts are, and for those conversations, we just work with the team. So we don't just work with the founders. The entire work, we become part of the team. We join the team literally, and the work is with everyone in the team. So we actually know everyone in all the in each of the companies, and the work we do is with their team, not just with the founders.
Very good. Well, at this time, let's give our thanks and appreciation to both Kingsley and to Joseph for coming and sharing their experiences. We have an opportunity now that we are posing to you, and that's for you, if you're interested, that you express your interest in this program. There's a website. I'm going to say the website. I know that isn't done, but I'm going to say it anyway. It's BFA. BFA is the company, the parent company. BFA.works/IDC. BFA.works/IDC. Or Google Catalyst Fund and you'll come to this page eventually. Click on that button and express your interest. That is how, it's not an application form. It's just expressing your interest in the program. Catalyst Fund will review those expressions of interest, and they will select several of them, many of them, and send them the next step, which will be the formal application. They won't repeat any questions, but they'll just ask a few additional questions, which will become the application form, and that is the process for applying. You have until June 22nd, which is not long, okay? But I assure you, this form is not difficult, so you don't need to delay. Perhaps during the time that we have together, you can also introduce yourself, let us know that you're going to be expressing your interest. Coyote is around. I am around. If you have additional questions for Joseph or Kingsley, they are around. With that, I want to just say thank you again, especially for those of you who showed up on time. Those of you who came a little delayed, you missed it. You missed something, so ask them what it is you missed. And we have refreshments over here too. We want you to help yourself and enjoy the rest of your time. Thank you once again for coming and joining us. We want to hear from you. We look forward to it. Thank you, everyone.